Hello everybody, welcome to my channel. Today we'll be talking about a company called Envela Corp, which is specialized into re-commerce of jewels and precious metals. And this company today is not presenting like a huge amount of upside, but I think this is such companies that it's good to track over the next month, quarters, years, because I think the re-commerce process, environmental problem, and like the purpose of recycling might be like a tendency that will develop over years. So it might be a very long-term, let's say, investment idea, but that's why I want to present it to you today. Ticker is ELA, and at the moment the share price is between 5.8 and 6. Yesterday it just increased a little bit. I put a target price here like around $8 for next year, but it is really, there's a big window you will see during the presentation that depending on the P and the forecast, this price target might oscillate. Okay, I remind I'm not a financial advisor, so anyway, before you do any investment, be sure that you make your own research. So Envela, what is their model? Their model is really based on re-commerce of jewelry or precious metals. Okay. So the definition of re-commerce is refers to process of reselling previously owned or used products as a whole goods and or recycling of an item components or materials for reuse. Okay, so today we consume so many, nowadays so much, and then we just dump. So actually the amount of electronic waste, for example, also has increased up to like a market, total addressable market of $60 billion today. So it's a huge business. I mean, at least for me, one of the best investment is basically to use the waste of somebody and to basically add value to it and resell it. So it's actually very let's say wise and interesting business model. They have two divisions. Okay. One is retails. Okay, so basically anybody has a ring, he wants to sell it, he goes to one of these stores, get a price, and then Envela Corp is selling it to somebody else. And the other division is more like about commercial, so it's related to companies. For example, when they want to dump or to refurbish some computers that they don't reuse, they're gonna mobilize Envela Corp to get rid of this waste and maybe get a very small price. But Envela, we're gonna reuse these items and possibly sell it in a different way or refurbish it. One interesting point on this company is the very long profitability and the stability also of the ownership. So the CEO, John Loftus, has been there, I think, in the company since 2016 and actually holds around 48% of the entire amount of shares. Okay, so that's quite amazing, and basically these people have skin in the game, and this is really what you want. People who talk the walk. Also, just recently, a lot of insider buying, share buying, not too much. But this director, Alison De Stefano, she was pretty active in the $5, so we are nearby. Now let's go to the DNA card. I think it's really important for you to understand what is the metrics for this company. So the market cap at the moment is $157 million. They are not in the Russell 2000, so that could be potential upside also for this stock. They have a bit of cash, they are building the inventory, they don't have much debt. Okay, they are net income for the year is around $13 million, which give them, if you divide by the enterprise value, around 9% yield, so similar to a PE of 10. So this is quite interesting. If you see the revenue growth over the last 3 years, it was 161% increase, so this is quite significant, and the trend has not come down. Okay, so this is something that you need to understand. Also, the OPEX increase is actually less than the revenue increase. So this is what we call operating leverage. So over the last 3 years, they really demonstrated that they are, let's say, their scaling of their business is actually making operating leverage. This is exactly what you want. Meaning that if the revenue increased by 30%, actually your net income will increase by even more. And this is exactly what you want. Regarding the gross margin, it's oscillating between 20 and 25%. Okay, and then similarly for the net income, around 6 to 7%. Okay. Revenue growth for the last quarter was like higher on the second quarter, just decreased a little bit on the third. I think it's just like it is not like a lumpy business, but there can be some oscillation. However, the gross margin was a bit higher, so something we can keep an eye on it. Okay. Related to the total retained earnings of the company since inception, they are just actually reaching almost the break-even. So at the beginning of the lifetime of a company, definitely they have to add capital, raise money, and this is where basically the retained earnings are let's say negative. And as they continue year over year, if the business is profitable, you expect the retained earnings now to equalize and at the end to be positive. So basically this is where it's interesting. You build a company, it's not just to raise money, it's raise money to create a product, to sell it, to make net income, and then after being profitable on the final, on the bottom line. And this is what Envela is going to be reaching this year, profit, let's say break even in terms of additional paid-in capital vs net income. Okay. So this is really a good model, a good business model that works, even though, for example, the gold price or metal price, silver price can oscillate. They are demonstrating that for the last 5 years that they are making money. Okay. So now you want to, let's say, make a prediction. Okay. So based on this operating leverage, you can build a tendency. So you know that that's the revenue year over year, around 20 to 30%. And this is the OPEX trend. Okay. So based on these two, you can estimate possibly if something doesn't deviate too much from the past few years, you can estimate further revenue, OPEX, and net income. This is what I summarize here in this table. So considering my assumption for the moment is only 15% revenue growth compared to the 20-30% that they are regularly used to have over the past few years. And the revenue, so I consider in total revenue of $208 million. Looking at the gross margin, I do the average, let's say 20 to 25, so I just consider 22% to be a bit conservative. It gives us a gross profit of $46 million. Sorry. Considering the OPEX, I just look at this graph for the last few years, and I estimate that the OPEX related to this revenue might be around $30 million. This gives you a net income of $15 million, 45 minus 30, give you 15. And if you divide it by the number of shares, it gives you an EPS, earning per share, which is $0.6. Now you add a multiplier, like a P ratio. You multiply it by this ratio. And I used 3 different values, 10, 15, and 20, which gives you a share price of 4.4, which is lower than today, 6.6 if you have a P of 15, and 8.8 if you have a P of 20. To me, I just consider really like a conservative approach on the revenue and on the OPEX. So that's the reason why you can have like, let's say, low target price, because I want to be conservative on my target window. Okay. So this is something you can always, let's say, revisit during the year, depending on their trajectory, on the information that they give you, to refine your process, to refine your numbers, and basically to be a bit more accurate on the final price for 2024. So if we put that on the graph, 6.6 and 8.8, that's the values I was giving you here, P of 15 and P of 20. I put them on the graph, and obviously I just draw a line to see what is the compound annual growth rate that I will expect. And for P of 15, you can have only 11% growth, so it's not really magic, but this is why I just tell you that this company is really something I just want to put under the radar, but not invest completely a full position. But also if you put a P of 20, obviously the compound annual growth rate is increasing up to 52%. So I just put my target within this window. Personally, target $8, and that's why I just keep it here as accountability, so that next year when we revisit the company, we will see if the estimation was right or wrong. Something I want to talk about also is the net operating losses. So as I mentioned on the DNA card, they accumulated some losses for the first years of operation, and this they can claim it to avoid paying tax. So in total, they have $21 million of operating net losses that will expire by 2026. So what does it mean? It means that in the model that we used to build here, I didn't consider any tax, as you could see. I just did gross profit minus OPEX, which gives you a net income. I didn't apply any tax at the moment because I know that they have net operating losses of $21 million, which will last for a few years already, at least. So this is a good point also to keep them good margins for their net income. So as a conclusion, this company is strong. They have at least 5 years of straight profitability. Sorry for the grammatical. They have a clean balance sheet. We've proven it. They have only $15 million of long-term debt. The business in terms of precious metals has not been so good since the beginning of this year, because the gold price has increased so much that they can actually claim maybe a little bit more money for their products. And also they've been building total inventory recently, so they bought it probably at a lower price than today. So this is a bit of more extra margin that they will put in the pocket. We demonstrated also that they have a great operating leverage with a good track record. So this is something that we want to keep an eye on. 48% of insider ownership, so also a very little, like a tiny public float. For the shares, only 7 million are available out of 27, meaning that if there's a buying pressure, the share price will go actually possibly higher because there's not so much supply of shares. Also, recycling, re-commerce is really in the tendency. E-waste getting bigger and bigger, supply chain issues. So you definitely want to recycle what you have and avoid putting that into waste. So this is really a big tendency over the next years. That is the reason why I want to follow this company really much into more detail. Also, from a last LD Micro Cap conference, they did an interview, and then they mentioned basically that they opened 2 shops recently for their retail sales division, and they've never seen like such a good start for their stores, and both became profitable within only 30 days. So this is really a good note to have, is that they're making progress in terms of implementation of these retail stores. We talked about the net operating losses also, that will allow them to pay tax for the next few years. So that's something, another positive point. And if you follow the press release, they mentioned that they will develop a new recycling facility in Arizona for the solar panels waste. So they are already planning the next step, the next leg of growth. So I like that, to see that they have a vision, and that basically they are planning ahead. Okay, they don't stop just at the retail stores business. They diversify, so that's very good. The only cons that I see is obviously the retail sales might slow down over the next quarter. Recently, the total sales in December was minus, I think, 0.5%. So that might impact the overall sales for their retail divisions. So we need to keep an eye on that. And also for the gross margins, it's very important to keep an eye on that to see if there's no degradation, because there's many factors coming into play: inflation, gold price, consumption for the US citizens. So a lot of moving parts, so this is something we really need to keep an eye on, okay? And also, bon, this is one of the bad points I have on these companies, that they don't provide a conference call on a quarterly basis, so you cannot ask questions, you cannot, guess, at least have some forecast or outlook. They don't provide any. So this is something that you really have to now to follow a bit more. So every quarter I have to reassess the situation. So it's just overall a very interesting company in a very good field of opportunities, with a huge market in the e-waste, and that's the reason why I wanted to present this company. So keep an eye, have a like, and then subscribe to the channel if you want to have a follow-up on this company over the next few quarters and year. I will be happy to share some more news with you. So by then, I think I wish you a happy day, and then I see you soon. Ciao, ciao.